Still see here with you for another STO, and before we get to the charts here, a real quick mention to those of you who work alongside with me every day and show up to the live trading stream every day. Thank you for sticking with me as I work through this chronic pain that's completely ran me over as of late. My socials were affected the most, but I still show up every single day to the live trading room with you. And I'm grateful for that because we've had an incredible 2 weeks of trading together. My heart goes out to you and appreciate every single one of you. Words cannot do justice. That I am grateful to be here with you, always. And thank you to those who have watched a couple of live trading sessions I've uploaded lately on the channel. They have a high attention rate. There's a lot of great value in terms of trading and development, and I thank you for taking precious time out of your day to take in what I have to offer you. You make doing this more worthwhile, and I love you for that. Now, for the clients, please continue doing the work inside the Star Trader 2.0, and for both of you and I right now, we'll take a look at some trade ideas on the chart. If you feel at any time that you love my style and want to learn what you see here, I'll leave a link below to get access to Star Classroom. It's free to join, go through the foundation series, book a one-on-one Zoom meeting with me if you so desire. I love working with people, meeting others. And there's also a profitable strategy in there for you to pick up and learn and start new today. Create an account anytime you wish with the link below. All right, let's go. So just starting out here on the euro dollar, I wasn't going to recap this, but let's follow price action, what it's doing now. So we don't need to worry about that pattern anymore. We continue following price action. Euro dollar on the daily time frame here. What is price action doing? Let's take let's actually change the color of that. That's easy to see. So what is price action doing? We have a move from our swing high to swing low. We have a pullback. Look left. We come in to that level, and then we get another move towards the downside. Okay. We break and close below this low right here. Then we get another pullback. Where do we pull back into? Look left, structure. And we continue. We get another move towards the downside. We have a pullback. Where do we pull back into? Look left. And we have structure here, here, here. And we continue to follow price action towards the downside here. Now we've come right into a major level of structure. So from this point, the euro dollar, we expect that we get a reaction from here. Why? Because if we scroll back and then we look at this structure level, you can see that it was tested here, right in here, right here, here, and right here. Every single time price action comes and tests this level, what does it tell us? Price action tends to react. Okay, so as we come down into this level right here, what do we expect price action to do from here? We are always looking at the probabilities in the markets. So we expect that there could be a reaction from here towards the upside, right there. Or there could be a reaction that continues towards the downside into our next major level of structure down here. So after we identify what price action is doing, then we can set up potential trade opportunity that meets our criteria. What does that mean? Well, let's say that we trade trend continuation trades and we trade pattern trades, okay? After we identify what price action is doing, which we are moving towards the downside here, and we've reached a decision point, well, now we have to ask ourselves, is there an opportunity to trade right now? The answer is no, right? That meets my criteria. So if that's the case, we continue waiting. We use the if-then syntax here. If there's no trade opportunity, then I wait. All right, what are we waiting for? Well, price action to meet certain conditions that equal my criteria to execute a trade. Okay? So this is what price action is doing. I anticipate that we get another move towards the upside here. Now, yes, we may get a move right back down to this level. I continue breaking this low. If that's the case, so again, if that's the case, then we continue to wait for price action to set up an opportunity for us. So I'm looking for price action to retrace back up into to look for a selling opportunity towards the downside. Or we can wait for price action. This would be on a lower time frame. We can wait for price action to put in a little pullback here, a retest of this low, and then another move towards the upside. If that's the case from the euro dollar here, then I'd be looking at a pattern trade opportunity right here. But I'm not sitting here in front of the charts trying to force something out of the markets. I'm being patient. I'm waiting for price action to come to me. I'm waiting for price action to tell me whether I can execute a trade based off that which I tested. Now, why the significance of that? Because if I trade anything else, the likelihood is I'm going to lose money. Now, not every trade is a winner in the same way that not every trade is a loser. We're 50% accurate on my strategies here that I trade. I'm waiting for price action to tell me whether to buy or sell. And the way that price action will do that is to set up a trend continuation trade for me or set up a pattern trade opportunity for me. Every time I buy or sell a trend trade or a pattern trade, I have a 50% accuracy on being right. Now, if I have a risk to reward, okay, so let's say that price action comes up here and I'm looking to sell. So we sell right here, stops above the swing high right there, and then targets at a retest of the lows. Now, if I'm 50% right on these and target 1 has just over a 1-to-1 risk to reward profile, that's a positive risk to reward profile, then over time, trading that every single day, throughout the entire year of trading, I'm going to be profitable because this right here is a positive expectancy. And knowing that only comes about from taking said strategy and testing it for yourself. So after knowing that, all I have to do is what? Come into the markets every single day and trade that which I tested, also known as trading the plan. So if I'm half right on this and we have a positive risk to reward profile, then over time, I'm going to be profitable. There is a mathematical proven probability that I'm going to gain more than I lose. And that is what a positive expectancy is. So that's target 1. And then we're also looking for extended targets, target 2. So with this risk to reward profile, we only have to be half right. Then what's required is the discipline to come in and trade that every day. And I promise you that doing that, following that formula, you will do incredibly well for yourself in trading. It doesn't have to be overcomplicated. You learn how to identify price action, which is what we've done right now. Then you take a strategy, one that you like, and then you go back and test that strategy over 100 trades minimum. You want to find an average. And out of the 100 trades that I took, what is my expected return? What is my expected loss? How often was I right? What's my strike rate? In other words, win percentage. And if you have a good risk to reward and you do those steps, then what you will find, I know you'll be incredibly surprised, right? And that's what we do here every day. So trade this day in and day out. By knowing your numbers, we know that we're going to be profitable over time. That's the simplicity of it. And then the belief comes about from testing. And also taking that which you've tested and going and live trading that. Taking that and trading it live and seeing it work. Then that belief starts to happen and you cultivate faith in what you were doing. And having that edge is going to be incredibly powerful in your trading. Doing that and trading that every day, it's an emotional liberating feeling to have that. You're less likely to react in the market, and after certain moves are happened and criteria is met, you're more likely to respond in the markets. And trading this way is where we want you to be. So the next thing we want to take a look at is not dollar CAD. Let's jump over to pound dollar right now. So pound dollar is a similar play. So going off what we just talked about, we took this in the live markets. It was a trend continuation trade towards the downside. We made a lot of good money here because we're half right on these trades and we have a good risk to reward profile, right? We have a positive risk to reward profile. What is price action doing now? We continue to move towards the downside. We close below this low right here. Then price action puts in another pullback. Where do we pull back into? Look left. This level of structure here. Or we're just shy of it. And then we get another move towards the downside. What have we done here? Just zoom in. We get a lower low, lower close. So we break and close below this low. So now we have a similar setup at play. We're waiting for a pullback back up into this level right here. And then we can look for a short. We continue doing that over and over and over. Now that's the trend trade that we're looking at. So that's a trend continuation trade. However, we have something at market right now. So get rid of this. We have something at market right now, and that is, if we scroll out, you can see that there is an M formation in here. Okay, actually we'll get rid of these. I'll take this low down here, and we'll go from swing low to swing high. So what I'm looking for is a move right down here, and then we have another pullback. So this is the start of our M formation, okay? So we have our X, A, B, C, a lot of you can see it right now. C, D completion right down here. So there is our M formation. What we're looking at is a bat pattern trade. Let's grab the Fibonacci retracement tool and go from swing low to swing high. Do we get a 382? Yes, we do. Swing high to swing low. Do we get a 382? Yes, we do. So we have two conditions met. What is the third one when it comes to pattern trades? Well, we need a CD completion. CD all the way down into an 886. Do we get that right here? Yes. So now we have at market a valid pattern trade opportunity. Does that mean, does that guarantee that price action is going to shoot up from here into target 1 and target 2? No, it does not. As you can tell from the previous STOs, I've been wrong on a couple of these trades. I don't have a 90 to 100% win percentage. You know, I'm not right on all of these trades. All I'm looking for, as I mentioned before, is I just want to be half right on these. I do have periods of loss streaks. Happens to everyone. It doesn't matter how good you are at this. These are what's called drawdowns in trading. But the antithesis is correct as well. Not only do I have drawdowns and experience loss streaks, but I also have win streaks and new equity highs. Last month and this month, we've been on an incredible win streak. And everyone knows that inside the live trading room because we do this London Market Open every single day. At 8 a.m. we come in, we trade the portfolio, we trade the plan, and we do this every single day. So there may be a couple of losses on the STO on the daily time frame, but throughout the trading week inside the live trading room, we could have win after win on the 1 hour. Right? So we do have periods of win streaks, new equity highs. We do have periods of loss streaks, which are drawdowns, right? We have pullbacks in the equity curve, just as we do with everything else, right? Nothing is 100% guaranteed. So we come down into the 886. We have a probability. So I'm half right. We have a probability that we may get price action to bounce from here back up into that level. If we do, then we might make some profit on that. If we don't, then we're going to lose. We give money back to the markets temporarily. So this is our M formation. So this is the BAP pattern here. Let's grab our triangle tool. X to A to B, oops, B to C, and C to D all the way down here. So right now we are currently at market, okay? Make this green for our buy zone right here. So anywhere within this box is where I'm looking to buy, okay? Now, if I am wrong on this, we need to know where we're getting out if we're wrong. So where do we put stops for the bat? So let's say, grab our dealer thingy here, like this. Let's say we enter at market. What I'm looking for is stops right at the 113. So why is stop placements significant here? Well, if we are wrong and price action moves towards the downside, we want to get out. This is cutting your losses. So if I'm wrong, I want to get out at the 113, okay? So if price action comes down past this low right here, I need to get out. So that is where my stop is going to be, because the likelihood of what's going to happen next is we may get a move back up into, so we get a lower low, lower close below this low, we may get another leg down. Now we want to get out here, don't we? Not all the way down here. We want to get out at 150 pips. We don't want to get out at 320 pips, right? So this is where we want to get out here, not all the way down here if we are wrong on this trade. Okay. Now, why do I do it that way? Well, easy, because that's the way I've tested. This is the way I've tested the strategy. So if that's the way I've tested the strategy, and that's the way I know works and gives me an edge, then I need to match that with how I've tested. So that's how I continue trading it live every day. Because that's what works. That's what gave me the edge. If I deviate from any of that, if I deviate from the trade plan, I'm going to lose over and over and over again. And then what happens? Well, you know what happens. Your account gets wiped out. And you're back to square one and you're frustrated, pissed off, annoyed, revenge trading. I need to make this and get this back. And that becomes disastrous. And we all know how that ends up. And that's why we do this. We're disciplined. And we trade the plan like a mantra. Every day you come in and trade the plan. Be as robotic as possible. Right? Because you know that gives you the edge and makes you the money. So where are we getting out if we're right? Entries at the 886. Stops right down here below our X point. Okay. Now, if we're right on this trade, where are we getting out? Well, if we get a bounce up into 382, so this structure level right here, then we want to take off target 1. We want to take off half of the position. Okay. So is this a good risk to reward profile? Yes. We have over 1.5 to 1 risk to reward on target 1. Then what we do is we duplicate this. So I'm going to clone that, move it over here like this, and drag this all the way up into the 618 right there. So now we have target 1, 382, and we also have target 2 at the 618. So we have over 2.5 to 1 risk to reward profile on target 2. Now, do you see the power of this? If we're half right on this and we trade this every single day and we have this kind of risk to reward profile, doesn't take a genius to know that that is profitable. Again, this is where we want to get you to. Because that's the only thing that matters, is your results. The whole reason why you're here spending precious time with me ultimately is so you end up making money. And I pray that you like my material and what we do here and spending time with me. But at the end of the day, the only thing that matters is your results. And this is the way to get there. And, I didn't intentionally mean to pitch it in this way, but if you want to set up trading as a business in that way and follow the same steps outlined here that I'm going over with, then yeah, the Star Classroom is free to join, link below. But what I want you to do after you sign up is go through the foundation series, because it's a 4-part video series that it's not often discussed at all, setting trading up as a business. Because what I'm showing you right now, being half right, positive risk to reward, is everything that I go over in depth, in detail, in the foundation series. So if you click the link, create the Star Classroom account, and go to the Foundation tab, watch the 4-part video series, and it will change your entire world of how you see trading. I promise you that. It will help you set up trading as a business. And even better, if you have any questions, write them down and then reach out to me over live chat, and I will do everything I can to help you move closer to that which you want to be, a consistently profitable trader. Doesn't have to be overcomplicated. We can do it streamlined approach. Do this, 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 and this, and get results, because nothing else matters. Only your results. And if time is an investment, then I want to do the utmost I can, and in the most genuine expression I can, over deliver on my promise to you, to getting you from point A to point Z. So the next thing we've got is, what do we got? Dollar CAD it was. Dollar CAD, trend continuation trade towards the upside. We have a little move down here. We get a big move towards the upside. We get a pullback right here. And then we get another move high, and we close above this high right here. Okay. Now we have a pullback, and we can look for a long opportunity here. So if you grab the dealer right there. So looking at a trend continuation trade over 1.5 to 1 risk to reward profile. Okay. Now we may get a move back up into and retest this shoulder right here, and complete a little head and shoulder right here, and completely drop off a cliff. That can happen as well. But by being 50% accurate with this kind of risk to reward, You clone this. We look for a new structure high. We have a pullback here. And what I'm looking for is a move towards the upside to retest this high. And potentially, if we have any strength, potentially we may get a move higher. Where? Let's grab a Fibonacci extension tool. Swing low, swing high, back down in. Well, we may get an extension right up into the 127 right here. Okay. Over 1.5 risk to reward profile, and over 2.5 risk to reward profile there. So we can look for potential long opportunity on the dollar CAD right now. However, we may just completely fall off a cliff from here, but a good opportunity for with our risk to reward to see if we can get another move towards the upside if this has any strength in it. Next we have the dollar, Kiwi dollar, that's the one. Kiwi dollar we've got on the 4-hour actually. We're just shy of the pullback here. Continued our move towards the downside right there. And what I'm looking at is in here, so let's zoom in right now. Zoom in and we'll finish off with a W formation here. So here is my high and here is my low. We get a move all the way up here. Then we get a pullback right here. And what I'm looking for now is a CD completion like this. So if we get a move back up into 0.59s, then we can look for a potential sell. And the pattern would be a bearish bat pattern. So Fibonacci retracement, swing high to swing low right here. Do we get 382? Yes, we do. And we get another move right down here. We get a 618 there. What we're looking for is a CD completion all the way up into, so at about 0.6, even handle number right there. So if we get a move back up into our 886, then we are looking to sell this, because here is what I'm looking at right now. So we have our X to A to B, B to C, and C to D right here. If we do get a move up into this level, this will be our reversal zone, so make that red. Like this. So if we get price action, a CD completion all the way up into this level right here, anywhere within the box we can sell. Okay. Anywhere within the potential reversal zone is a sell for us. So 886 is where I'm looking to sell. C 886, so it'd be about 37 pips for risk. So let's do our dealer thingy about here. Right there. So we will sell here. Stops above the X point looking left. Okay. Where are targets? Entry 886. Stops above our X point right there. And targets will be at the 382. Again, risk to reward profile. It's good. We have a positive risk to reward profile. Let's duplicate that. What we want to do is drag that down into the 618 right here. Okay, so now we have our potential. Reason why I say potential is we can get another move towards the downside. And if we if we push past this point right here, then this pattern is no longer on the radar. This pattern will no longer be valid. Okay. However, if we do maintain the momentum here and we continue to push towards the upside, we will get the CD completion and we will have a valid bat opportunity to sell at this level right here. So that is what's on the radar. Pound dollar, dollar CAD, Kiwi dollar, Yep. So this is the potential bat pattern trade on the 4-hour time frame for the Kiwi dollar as well. Okay. So these are my opportunities that I have. So that's what I have on the lookout for the week. Pound dollar bat, dollar CAD, TCT, and Kiwi dollar bat on the 4-hour. Again, if you want to learn the trend trade strategy, it performs incredibly well. You can do so inside the Start classroom at any time. I'm also around, so feel free to open the live chat support and ask me anything that is on your mind. My door is always open to you, and I'll do what I can for you. For those of you already with me, I will see you in the live room 8 a.m. this morning, London market open, and to everyone else, I will see you on the next video. Be safe, enjoy life, and I'll talk to you soon. Thank you so much. Appreciate you always.